Hey guys, Stockaholics, thank you guys for being here today. This energy crisis is a demand shock. We are in an energy crisis. If you look anywhere on the internet, there is a lot of discussions around this. Europe and the UK are paying extraordinary prices for their electricity needs. And I think a lot of this, the attention on this is kind of like an underinvestment in fossil fuels as kind of the idea or the culprit for all of this, as we are in some kind of a energy transition. I think there is supply side issues. I don't disagree with that, but I think the cause that is more attributable to this situation is demand. And I wanted to show you guys this with some historical charts in this video today. This is a chart of uranium, coal, crude oil, and natural gas. All of these commodities, these energy related commodities, have entered a bull market since 2020. They all have energy related uses, but they are not all immediately interchangeable, right? I cannot take a bunch of uranium, for example, and I cannot use that in a natural gas electricity plant, for example, okay? I can substitute some of these, I can interchange natural gas occasionally for some things like that with coal or maybe crude oil in some small places here and there. But in many ways, they have similar investment cycles. They tend to overlap, but there's something underneath all of them. There's something that is fundamentally driving all of them to be moving at the same time. There's something that causes them structurally to be in this kind of energy crisis environment. And I wanted to show you guys that I think that the underlying reason that all of these commodity prices go up substantially is because we enter periods of demand based on US monetary growth. But before we get more into that, I wanted to show you guys this chart. This is global primary energy consumption by source by year. As a human species, we use more and more energy over time, but we do not grow at the same rate in terms of energy consumption every year. There are periods of time in which we grow dramatically. There are periods of time in which we grow less dramatically. Generally, over time, though, as we advance as a human species, as human civilization, we have increasing energy needs. We do not tend to transition into other types of energy. We simply layer them on top of the ones used previously as our energy needs increase over time. Now, in this chart, we're growing up dramatically. In 1930, we start at 20,000 terawatt hours, and today we're somewhere, 170,000 terawatt hours. But you can see that there are some very sharp growth rate periods of energy consumption growth on this chart. 1960 to about 1975, you can see that there is a really sharp growth rate happening over here. Basically, you went from 40,000 terawatt hours to almost 80,000 terawatt hours. It was a double in energy consumption in basically 15 years. You would imagine if we continued this growth rate, by 1990, we would have been at our energy consumption that we are, a similar rate that we are today. There was a recession over here in 1975 where energy kind of stagnated the growth for a year or two. Then that growth rate that was very similar to the one before continued. There was a recession 1981, 82, particularly in the United States, that I believe caused this decline over here. And then there was growth for the next 20 or so odd years, but not at nearly the growth rates that you saw before. Something is fundamentally driving this growth rate. That growth rate, again, very similar to these periods over here, again started in 2003, 2008, and I'm going to get to that in a second. I think what is underpinning these huge expansions in energy consumption growth are driven by United States monetary expansion. Kind of show you guys this in another way. This is the annual change in primary energy consumption in terms of percentages. So instead of just looking at that huge, compounding graph, we can see the change by year. So in the 1960s until about 1980, you can see that there's this really high rate of growth. This matches US monetary growth. I'll show you guys that in a second. There's two periods where energy growth rate goes very low. These are two US recessions where monetary growth in the United States collapses at the same time. There's a short period over here where you can see that there is a large growth in energy consumption. Then there's a very long period over here in the 90s and 2000s where the growth rate all around the world was not growing at the same rates that it was prior, okay? But that changed in 2003 until about 2010, where you again saw this very high growth rate, similar to some of the times prior, come back. And I'm going to show you guys in again in a second. I think this is US monetary growth. Since 2010 or so, very low energy consumption growth rates around the world again. But what we're seeing now with these energy crises around the world, I think what this is showing us is that the growth rates are rapidly increasing. This is a chart of loans and leases in bank credit for all commercial banks, percent change from a year ago. Okay, so this is basically a proxy for figuring out how much monetary growth is entering the real world economy at any given time. If you guys don't know, we have something called the fractional reserve banking system. Essentially, whenever a bank gives a loan out into the public, they create US dollars into the real world economy. Now, in the 70s, this chart doesn't go all the way back to the 60s, but you can see we came from this really high period of loans and leases. This is because there was a lot of boomers entering the housing market at that time, lots of loans being given to them. Now, again, in 1975, there was this big crash over here in loans in the United States, low period of energy, or not energy, dollar creation, right? But if you look over here, it matches this period over here where there was low energy consumption growth rate at the time. Then it rebounds over here in that energy consumption. We go back over here and you can see that loans and leases, the increases in dollars that go out into that world economy, was also rapidly growing at that time. There was a second wave in the US housing market at that time. The boomers again were entering that housing market after a brief recession. In the 80s, there was a double dip recession over here, low monetary growth for a number of years, but you can see there was sort of that rebound by, looks like 1985 or so. And if you go back over here, you see that the growth rate in energy consumption around the world again started to grow after that. Now, after that, basically we had low monetary growth over here. We do see that there's a couple of spikes where it goes above this kind of 10% growth rate line, but it is growing, but it's not nearly growing at these huge rates that it was prior. Okay, you also need to keep in mind that at the same time there was a period of huge investment in commodities, right? You have a lot of these dollars chasing these commodities. It caused a lot of investment in these commodities, and eventually that, even though you have maybe a little bit higher monetary growth over here, it was against a bigger supply of overall energy commodities, right? Now over here, you start to see that we have a period of high monetary growth. So you have a period of sustained monetary growth over 10% a year in terms of loans and leases, right? From about, it really starts to, well, it increases around 2003, and then it sustains until the global financial crisis in 2008. After that crash, low monetary growth. We go back over here, huge energy growth rates around the world, crash after 2008, low energy growth rates, consumption growth rates. This was also a period of, I guess, what you would mirror it to before, where you had higher energy and commodity capex, you had oversupply relative to that growth period over here, and lower energy prices. Today, we have huge monetary growth in the United States. This was caused by the PPP loans, stimulus, monetization. We had a 30% growth rate in M2. It might look like we were entering a recession recently, but none of these dollars were destroyed. This was pure monetization. And we are again, if we looked on this in terms of billions of dollars, we are again entering a period of huge growth in the traditional monetary sense of loans and leases in bank credit. Now, what I'm trying to show you with these charts is that the thing that binds these energy growth rates is ultimately the United States dollar. And again, we are in this period of very high dollar growth rate. But what scares me is that we have very low supply at the same time. And we've just had an event that essentially destroyed a significant part of global energy production. The medical event, which we can see here from the North American Oilfield Services bankruptcy filings, caused a tremendous havoc around in the United States in terms of the ability to produce new supply. If we look in kind of the shale patch today, it has slowly been increasing the production with in U.S. oil production with these higher oil prices. But over the last couple of months, that growth rate has been kind of flatlining. This is because the industry was so hammered by all of the unnecessary lockdowns around the world and just caused tremendous havoc. Okay, now this is just the United States. Okay, United States is kind of a swing producer in terms of oil. They're kind of the marginal barrel on the total overall global market. But I would imagine that just like before, we are looking at some bankruptcies in the United States. You would imagine, at least in terms of overall capex in a lot of oil producing countries out there, or just any oil production company out there, oil services, whatever, or any basically energy related commodity, period, you might see that there is a lot of bankruptcies that unnecessarily happened at the same time. Okay. And you combine this with this huge monetary growth that we're seeing now. We have another demographic driven dollar creation spike in energy demand, and we are in a period of huge squeeze for commodity energy related commodities. This is what I think is happening. I think we are in a supply shock, yes, but I think we are also in a massive demand shock in terms of energy commodities. Let me know what you guys think in the comments below. Have a great day.